analysts at Cordros Securities say they expect Nigeria's equities market to show a choppy pattern as investors take advantage of the price moderation of bellwether stocks last week. Opeoluwa Oluwa, a research analyst at Cordros, joins us now for a market update. Opeoluwa, it's a pleasure to have you on the program today. So, obviously, over the last couple of weeks, and indeed most of the second quarter, the market has been choppy indeed. And the big question is, what is the catalyst that will get it going? Now, some are pointing to the half-year numbers, and perhaps if we see that in July, that could trigger a rally. But I think on the flip side, there are serious concerns around the economy. Overall, what are your expectations?
Yes, so thank you very much for having me today, first of all. I mean, our expectations for, the domestic market, as you said, will continue to exhibit a choppy pattern, and we think that this will be driven basically by the kind of, events that are currently shooting in our domestic space right now. I mean, we have currently, we have we have a weak macroeconomic background. First of all, they now consider political uncertainties that are continuing to float across the domestic space and continue to be the main headlines and topic of across the domestic market. And I mean, there's also some respite that we expect to come from corporate earnings. So I mean, I think that, or rather, we think that in the near term, there's still there's still room for the markets to shed more points from where it currently is. But we think that corporate earnings, especially corporate earnings from companies that usually typically offer nice dividend yield to investors, will be the turning point for the market. So we think that once these companies come out or release their half-year earnings reports and this reports and this and their financials, and they put very positive financials for the half-year, we think that there will be some turnaround from investors as they again buying these companies in order to exploit companies that posit interim dividends, which would most likely which will be positive for earnings, basically. Yeah.
I mentioned second quarter results, and indeed sometimes we do see some interim dividend payments as well. But that brings me to the story around EcoBank and the payment of 16 cents as final payment today to its investors for the full year. And it's an opportunity to talk about that bank that obviously is Pan-African, it's well diversified in that way. What's your rating of the stock?
Yeah, I mean, for TI, we think we rate TI as, you rate tier 1 banks because, their balance sheet is as big as that of the other Fugas banks that, mentioned in the Nigerian domestic economy. We like the fact that, the company has the Pan-African base, which means that its banking operations not just spreads across the Nigerian market, but, it goes up the African market. And considering the fact that, 2022, our general outlook for banks is that, since there's sort of a stability in current macroeconomic conditions, we'll start seeing, banks, financials become more stable in 2022, so even more profitable than what we've seen in previous years. So, when we off the top of our head, banks that we think that, will put out strong earnings, the tier 1 banks mostly, and ETI, and other banks that maybe Stanbic or we have strong, we have a strong rating or strong good recommendation for ETI as it's
right. And strangely, it seems this time around, as we see high oil prices, it's adding more pressure than, if you like, good news for the economy. Given the impact on the prices of fuels like diesel and so forth. But the interesting thing I observe is that the oil and gas index of the NSE is up 57%. And I think it's an opportunity to think about the implications of these high oil prices for some of those listed companies. Your thoughts on the likes of Seplat and Oando, are they big beneficiaries of this move to the upside for the oil price?
Yeah, for us, any company that is currently operating in the oil exploration parts of a value chain of the oil and gas space is most likely strong. Is most likely to benefit strongly from current crude oil prices. The first thing that comes to mind is the fact that this means significant increases or improvements in their free cash flow, which can be channeled towards other segments of majorly investments, right? Which would mean that the companies will be able to invest in their operations and put out more earnings for their shareholders, basically. So I mean, one big example is how Seplat has moved from the end of the year till now, right? I mean, one of the major drivers that has driven it is the fact that crude oil prices are now near $100 per barrel levels, which has caused a lot of analysts to positively rate the stock. So yeah, this is very, very positive for companies like Seplat and Wando, who are oil explorers or oil exploration companies.